Well, foreclosures are up 219%, guys.
Mother of God.
I know that sounds crazy, right? But let's jump into the information of why foreclosures are continuing to go up, and up. So let's jump into this, guys. Dramatic increase. Foreclosure filings are up more than 150%. Here's what that tells us about the housing market. As we know, you can go on Zillow, look up this information, Redfin. All of these places have this information on this foreclosure information. But here's the thing. Why are foreclosures continuing to go up? Well, we've had things like inflation. We've had things like rate increases continuing to go up. We've even had inventory shortages, making things continue to be unaffordable. But things are starting to change. And now things like the labor market, layoffs are starting to happen. Things like that, where before, 6 months before, everything was going great. Money was continuing to be pumped into the economy. Everyone was flush with cash because the government was giving things like stimulus checks, PPP loans, and it goes on and on and on. And now all of that is drying up. So now we're starting to see people's hardships start to come up. And this shouldn't be a surprise, guys, because if you've been watching my videos, you know that I've been saying a recession is coming. And now we're starting to see the Fed. Now we're starting to see news cycles and media all starting to state, we think a recession is coming.
Oh, it's true. It's damn true.
But if you've been watching my videos, you know that I've been saying this for months. So hence the reason why 82% of you guys that are watching this video should hit that subscribe button. Why haven't you subscribed? Hit that subscribe button. It really allows this content to be shared to more people. But let's jump into this article. It says the number of foreclosure starts, which is when the first public foreclosure notice happens. It is up 219% since the start of the year, according to the real estate data by ATTOM Adam. What's more, the number of properties that had foreclosure filings is up 153% from the same time period last year. Fully 96% of major metro areas saw an annual increase in foreclosure filings, with foreclosures rates highest in Illinois, New Jersey, and Ohio. And when it comes to the number of foreclosure starts, California topped the list, followed by Florida, Tennessee, Illinois, and Ohio. Now, guys, does this really surprise you? I've done videos on Florida. I've done videos on Illinois, California.
California, here we come.
Telling you guys why these areas, when you look, especially California, especially Florida. I've done so many videos on telling you guys, when you look at Florida, especially South Florida, Miami, when you look at the condos, look at how expensive things are. Look at how the demand is dropping, and yet the prices are still going up. Does that make any sense?
Garbage.
With that being the case in that area, that is a recession written all over it, guys. To see that these areas are starting to have high foreclosure rates, or they're beginning to get, climb that rate of foreclosure, topping the list, is not a big surprise to me. Chicago is a big factor when it comes to Illinois. I see a lot of downturn in the Chicago area. But here's the thing, guys. Here's the thing. This is what I really want you to focus on. The thing that is making a lot of this stuff start to creep up is you are starting to see job losses happening. I know what you're thinking. You're thinking, Orlando, we just saw the government say the labor market is strong. Everything is going great. Well, I mean, that's maybe true on the numbers, but I'm starting to see multiple companies lay off people. I just did a video where Ford is laying off 8,000 people. Does that really sound like everything is okay in the market? I mean, Netflix laid off a bunch of people. We're seeing all these tech companies, Apple and all these other companies, the mortgage industry, since we have high mortgage rates, they're laying off tons and tons and tons of people. Do you think that with all of these layoffs, that the labor market is really as strong as the quote unquote numbers say. And then we come to find out that the numbers are actually individuals having 2 to 3 jobs just to make ends meet. Now remember, labor market is strong, but we have to put the but in there, right? But income has not gone up for individuals, but prices have continued to skyrocket. So prices continue to go up, income stays flat.
You got me.
And you working more jobs, 2 to 3 jobs, just to afford the normal things. So if you look at all of that big picture, does that seem crazy? The reason why foreclosures are going up. It makes total sense to me. It makes total sense to me. Foreclosure activity across the United States continued to slow, steady climb back to pre-pandemic levels in the first half of 2022, says an executive. While overall foreclosure activity is still running significantly below historic levels, the dramatic increase in foreclosure starts suggests that we may be back to the normal levels by sometime in early 2023. So they're saying that we will be back to normal, and when it comes to foreclosures, the beginning of the year. Now, what does that kind of align with, guys? If we're saying that we're going to have a recession coming up and we're continuing to see the Fed increase rates by 75 basis points, we have 2 more to go this year, and we see that that recession is coming towards the end of the year, possibly, right, or at the beginning of 2023. You see how this is aligning? With the recession coming, you have no other choice. Things are going to happen. Things are going to move around.
Get over it.
Foreclosures are going to happen, guys, in a recession.
Whoa!
I don't know if you guys remember 2008. In 2008, obviously, we had a big issue with people paying their mortgages. Will that be the same thing that happens in this scenario? Yes, but will it be because people can't afford mortgages because they're too high? Or will it be because they don't have a job? Or will it be because they overpaid for a home and now the overpriced home is causing them no longer to afford the home? Or hey, maybe people decide,
I don't want to be $100,000 in underneath a home. And for it to get back to where it was, it may take 10 years to gain that $100,000 equity back.
maybe that is the case, but I can tell you this, guys, we are going to hit that recession, and these numbers here will look very unimportant when the recession hits and you see the new numbers that are going to happen. What does the uptick in foreclosures mean for the housing market? Foreclosures are shooting up as the various foreclosure moratoriums that kept people in their homes during the worst of the pandemic economic disruption have ended now, explains an economist from Realtor.com. That said, they are shooting up from extremely low levels, she added, noting that even after the sharp increase in foreclosure activities observed in the first half of 2022, we're still not back to 2019 low pre-pandemic mid-year totals. Now, that is true. Once again, guys, you do have to remember that everybody had money. Everybody was flush with cash, with the government giving all of this money out to, protect the economy. That's what they say. And a lot of times foreclosure was just stopped at period. There was no one kicking you out of your house because you weren't making payments. They were doing a foreclosure kind of workout where they would take all of the payments and put them in the back end of the loan. If you were able to get past the 6 months that you had to pay up front when the loan would get switched over to the back end of the loan. I know that sounds confusing, but trust me, it is confusing. But the banks would do this mumbo jumbo stuff where they would kind of catch you in this catch-22, and you would have to come up with all of the money up front to actually get the loan refinanced and some of the payments put into the back. But either way, loans were stopped. That's the whole point of this, is loans were stopped and people got used to not making payments. What did people do with all the money they got from the government? Did they take it and throw it on their home? Nah. No, they didn't take that money and throw it on their home. They took that money and did what they wanted to do with it. Now we're coming into a situation where people don't have all that unemployment, all of that stimulus check money, all of that is gone. And now it's back to reality, and people cannot pay for their homes, and that's just a reality. There will be individuals who overpaid for a home. There's a lot of people who overpaid for the home, but there will be some individuals who overpaid for the home and will not be able to make those payments. That's just a reality, guys. And with that being said, there will be some deals to be had in that. Nobody wants anyone to lose their home. Not me. I do not want that, right? But the truth is that means that there will be some opportunity for you to buy some of these foreclosed homes at a lower price. So you have to know, with the recession coming up, there will be a fallout of that, and you have to be ready. Much like the sharp turnaround in housing inventory that we observed in the number of for sale homes recently, when the market has tilted in one direction very extremely, we see huge percentage increases when the trend shifts back in a different direction. Even though in many aspects, that's what we're witnessing in just a return to something resembling what was once normal. Now, I agree with that. You will see a tilt of things going to the extreme when we've seen a dramatic dip in 2 years of basically non-movement, everybody being flushed with cash. There's nothing you can do with that. What does this mean for buyers? While foreclosures remain unfortunate for the owners of those homes, for shoppers who have been frustrated by the lack of homes for sale in their budget, the increase in foreclosures could bring additional options. But much like the increases we see in the for sale housing inventory is just the first step. We would need to see many more months of these increases before shoppers will feel like they have an abundance of homes to choose from. Now, will this increase inventory by like a lot, like by a flood, a tsunami of foreclosed homes? I don't think so. But will this allow some people, maybe you, to get into a home that you may not have been able to get into because of a foreclosure? Even though it's unfortunate, it was a deal for you. Yes, I do see that happening. And if that can happen for you, or one of my subscribers, or anyone, right? That is a deal to be had. It's unfortunate, but that is the reality, guys. So what do I want you to do in this situation? Well, I want you to make sure that you keep an eye on your local market, keep an eye on properties coming up, and make sure that you check Zillow, Redfin, and all these other places, and keep up on my videos so you know exactly what's going on in this crazy, crazy housing market, so that you can have the opportunity, if you're looking for a home right now, so you can take advantage of an opportunity like this if it comes across. But remember, guys, you have to put in the time. You won't get a house magically appearing in your lap or in your inbox. You have to understand your market and understand you have to go searching for these properties, guys. Once again, I hope you got value out of this content, guys. I'm gonna need you to watch this next video here. It will help you understand what's going on in this crazy housing market. Also, get into your first rental property. Check in the description. I have my membership program and some useful links for getting free credit reports and whatnot. See you on the next one. Thanks, guys.